I just think you're seeing a little bit of selling pressure. We're really just in a pattern of consolidation. Markets have their low is around 4,500, their highs are around 4,800, and we've been churning in that range for a while. I fully expect this breakout to come to the upside. When is that going to be? I can't answer, but certainly I would be the long. And if I were to advise anybody, which again, that's not really what I'm supposed to do, but I am buying more physical gold right now. I'm willing to pay these prices, believing that gold is going to see more than likely 6,000 this year, if not higher. I think paper is to me, paper is worth what it's written on, worthless, right? And it's the stuff you go when you go to the bathroom. That's what that paper is worth. But from a trading standpoint, it's fine. Okay, paper to trade paper, I trade paper all the time. But if I want to own it, if it's an asset that I want to hold for a long term, I don't want to own paper gold. I don't want to own miners. I don't want to own any of that crap because I don't think there's enough gold in the world to cover the amount of paper that's written on it.
Right.
Okay. But again, so you have to decide, are you investing and you're going to put it away or are you trading it? When I'm trading it, I'm trading paper. I'm not trading silver, physical back and forth. It's too hard. So paper is the best mean for a trading vehicle. That's what I will use as a trader. But as an investor, I'm buying physical and I'm storing it. I think the biggest sleeper in the bunch is going to be platinum when it's all said and done. But let's use gold and silver because most people play in that market. I think that silver will outperform gold as we go forward. Okay. I think gold, let's say gold has a chance, in my opinion, from where we are right now, to go up about 25 or 30%. I think silver's got a chance to go up 40 to 50%. So I think silver is going to outperform. And of course, for many people and many investors, it's a lot more palatable because of the price, right? I mean,
Right.
you want to lay out a big number, So again, either way, but I would have some coverage to gold, silver, and platinum. If I were to break it down and I had X amount of dollars, I'd buy 50% silver, 30% gold, 20% platinum. You do get some of the players, that are buying silver, but they're selling paper because again, paper is worthless and they can control the paper market a lot easier than they can control the physical market.
Right.
So you can force people because more people are going to participate in the world of paper because they can use leverage, they can use margin, they don't have to take delivery, they don't have to pay for it up front. There's a whole bunch of reasons why. So it's a lot easier to force pressure on people using paper, especially if you hold the physical metal. Because if I hold the physical metal and I own enough of it and I want to push prices down, I can force paper down, which is then going to force physical down. I mean, the biggest mistake anybody ever makes in any trade or market is they get too big, they over leverage themselves. Okay.
Right.
So when you over leverage yourself, it magnifies the move for you or against you. And again, for you, nobody ever complains when the market's going in your favor, right? But when it goes against you, it forces people to panic, especially those who have not seen these market cycles before. So you need to invest in whatever you're investing in, whether it be gold, silver, whatever, Bitcoin, whatever you invest in, that has to be money that you're not going to need tomorrow. You're not going to need to pay it for the mortgage or the car payment or the rent, whatever it is. That money has to be met on something that you can afford to hold on to and close your eyes. And that's, of course, one of the big problems in markets today. Everybody's got an iPhone or an Android phone, and they're checking their 401k every 10 minutes. Well, you're not getting out, so why check it?
Right.
But that is the flow of information today forces people to make a lot of dumb decisions. And of course, they have the ability, especially in the futures market, to get too much leverage. And of course, like I said, leverage is unbelievable when you're right. But when you're wrong, leverage is very painful.
The chart's interesting. And before we get to the chart, one of the things I want to just mention is that we've seen this change in gold ever since that rally that basically started at the beginning of the year, the final, what we would call a blow off top. People started to jump into gold, not because it was a defensive play, but more because it was a momentum play. And anytime you have an asset that is more of a safe haven asset, where it starts to become a momentum play, it tells you that the structure or the reason it goes up or down is now changing. And ultimately, it has to flush down enough until it washes out those weak hands that bought it for the wrong reason. For example, a lot of your listeners bought gold like I did years ago because it's a safe haven. It's a way to protect ourselves against fiat currencies and lots of other shocks. So if we look at the chart, we can see here that we had the big blow off top right here, right? Parabolic move from about the 4,300 level all the way to 5,600. We then got the sharp correction and this sideways inside bar, another correction, and now again a bounce, and we're starting to come in again. And really what we're seeing now is high, lower, low, lower, low, right? So essentially we've changed from an uptrend in the near term to a downtrend. And that really has me more skeptical in the near term that gold's going to turn back up and make new all-time highs. Instead, the chart's telling me that we're likely coming down to this 4,300 level, maybe a small bounce, then we'll break down to 3,900 here. Now, again, will that be the bottom in gold or not? That's a good question. I do think that there's potential for a washout later this year back to about the 3,500 level. And at that point, that's where at least I've already isolated down where I am going to be buying long-term positions, right? So again, I remain a long-term gold bull, meaning that if you look at the government spending and what's going on in the world and the fiat currencies and the dollar slowly being devalued and probably slowly de-dollarization as well, it makes sense to buy gold. For me, though, I want to make sure I get it as close to the lows on this pullback as possible. And for me, that's 3,500. So I think, and this is the interesting thing, is a lot of the same reasons a lot of people like myself were buying gold years ago and even more recently, those reasons are still intact, right? Again, you look at all the issues that are going on with government spending, and we're talking globally here, the debt loads that are being put on so many countries, so many citizens. So I think the underlying factors are there. It's more that first thing you mentioned, which is that you have this period where investors, generally the investors that buy momentum, they don't have the staying power to stick around in a trade when it gets boring or if it slowly drifts lower. And when they start to unload, it then pushes that sell pressure even more. Now, granted, we could still say you have sovereign nations still buying, Federal Reserve banks are still buying gold. That's absolutely true. But there's still a lot of weak hands that are in gold that could cause it to kind of correct back down. And I would even say that we have to remember that when things get bad, meaning like COVID, remember 2020 of March, even though COVID was the obvious reason why gold should spike, when fear absolutely hit and the panic was in the markets, even gold sold off. And so you might see some sort of event where the stock market really gets scared, and that could be the final drive from 3,900 down to 3,500. And then that's where you start to see the reversion trade and it start to trade back up. If you historically look at the last bull markets that went from, if we go back to the 1970s here, this bull market, if we look at how long it lasted, from the beginning point to kind of the top out, it was only about 1,200 days, right? So again, you're talking, that was about 3 years of a bull move. And then if we go to the next one, which was the beginning of the run going back to 99, that kind of, you could argue, really lasted until, I guess you could make a case that it lasted until 2011. That was a longer bull market that lasted about 4,300 days. So I would argue this, and this is a very interesting aspect, that we're seeing as essentially the U.S. financial state deteriorates more and more, the bull markets in gold are elongating, right? So if we look at that one in the 70s, late 70s, early 80s, it was shortest. Generally, the U.S. had their fiscal ship in order, right? But when you look at the 2011 top, that was just after COVID when the Fed was really printing the most. We got the biggest parabolic move. And then obviously what we've seen more recently is arguably, you could make a case that the bull market started maybe at the lows in 2018. I would argue more in 2022. But this one could last, honestly, all the way into 2030 or beyond. And I think that, again, goes to that elongated cycle in these bull markets of gold. And listen, if somehow miraculously the U.S. gets their fiscal house in order and the world starts figuring it out, okay, maybe gold isn't the place to be for the longer term, but let's be fair. What are the odds that that's actually going to happen? I think, again, that longer term cycle is probably intact. I think, again, we just have to be a little bit more careful with silver, as it's obviously somewhat more industrial. And so it has more of a sway based on how the economy is doing. But what we can see is the same thing happen, that incredible move to $120 per ounce on silver, the massive collapse down to 64, a bounce, then another lower low, another lower high. And you can see again, high, lower, lower, high, lower, high, low, lower, low. So it implies that silver is likely going to come down, small bounce, and go even lower. And I'm still looking for sub $50 silver. And I know people don't want to hear that, but you can kind of make a case for it, right? I mean, here we are in an economy that this oil trade might start slowing the U.S. economy and the global economy. And then also if silver and gold and the metals are going to see a decline from kind of flushing out the weak hands, that combination could easily push us below that $50 per ounce level. And I think that's kind of where I'm eyeing here. On a technical basis, really this zone here, which was that final, notice how we kind of did this little bit of a cup and handle pattern and then broke out